Welcome to today's update for, what is it, Monday 9-22, going into the 23rd. Man, a lot of people talking about the rapture happening, but we're still sitting here just in case. We're going to keep talking about that technical analysis. We're going to get you some updated daily expected moves, and we're going to keep talking about how this market can keep grinding slowly up or keep going sideways in this area all the way up into September 30th, right? All the way up into September 30th if it wants. But we are going to talk about these signals for the 2 hour and 30-minute chart for the SPY and the Qs and volatility. I don't have much time, so we are going to jump right into it, giving you the daily expected moves first for the SPY, 669.40 to the upside, and we do see 664. 28 to the downside, right on that monthly move. This is a note to have, well, in your notes. This is what you would take note of right now is you are outside of the yellow line, meaning you are outside of the 68% zone, which means that by September 30th, you do have a 68% chance to at least close back below this yellow line, and that is worth noting. So if you don't have that level, I would get it's pretty much 664 flat, just so you're aware. As of right now, you do have the formation of 2 hour divergence on your MACD now. It's actually showing up not a rejection divergence anymore. That's actually a good thing in my book. I actually like them better when they have this look. So I'm looking at everything right now. And there is something that you really need to pay attention to. As everyone thinks that we're just going to keep squeezing, we're raising the floor. There is one thing we're going to talk about towards the end of this video called volatility that is overall suggesting that that might be a big trap, and did you catch it? So we will find that for you in a moment. 2 hour divergence here for the MACD, 2 hour divergence here for the RSI. You can see if I zoom in on that, it is slightly, ever so slightly down, not the most significant, but these things can roll down the daily charts, which we do have the daily divergence point, multiple divergence points there. So for tomorrow, we'd look at those daily expected moves. We'd look at the 30-minute chart, right? We don't see the 30-minute divergence here anymore, right? That was going to be our trigger, right? This was going to be our trigger. Okay, now we have the divergence, and now we're going to shut down. Now, I'm still going to say we might want to be paying very close attention to if we start to make not a higher low, but a new low and a lower high. I think we're really going to want to watch for that. Once we get to volatility, you'll understand why, but it's pretty much like this. Yes, on the SPY, you don't have those 30-minute signals, but volatility is still holding exactly where it was. If you look at the right side of your screen, you can see even though the market was up, volatility was up 4%. Who knows something that you don't? That's usually what you say in that case. So from this standpoint, we really want to look around. We want to look for, do we see similar things from the Q? So as of right now, it'd say, hey, we're going to continue. But if this does curl down, it would say, hey, if we're taking this individually, not including volatility, we would say we would pay attention to that 5-day. We would come down on the 30-minute, be able to get some kind of reaction off of that 30-minute and continue to the upside, where then we would set up maybe a potential divergence towards our weekly expected move. That is the correct way to look at this at this moment, right? Not trying to guess anything is going to happen. And then you would also say, hey, if the 2 hour is able to confirm down, then I do have a divergence on the MACD and RSI, which does heavily lean towards the daily chart being able to cross down for somewhat of a daily, if not weekly, pullback at this point because of how volatility has shaped up. Now, we're going to get into volatility after we go over the Qs. Let me give you those critical levels for tomorrow. We do have 605.59 to the upside. We have 598.81 to the downside. Once again, outside of the monthly move, 68% chance to just land right around here by the beginning of, or I'm sorry, by the last day of September. So I'd be paying attention to that. Now, we did discuss how this is wiping out divergence points. So the Qs are suggesting, one, either this is some kind of FOMO squeeze and it's going to end badly. That is one scenario. But the other scenario here is we just pull back on the daily, maybe down like this, and then we just keep on going. That is very possible with wiping out divergences on your RSI. Now, you do still have it overall on the MACD. My drawings are terrible today. I'm sorry. I'm trying to be a little bit quick and efficient with this and getting you the information that seems very necessary. But you do still have that divergence on the MACD, not on the RSI. So this would be a, what I like to do is lower the position size when I do only have one or two, not three indicators. So for the Qs on the 2 hour chart, we can see by blowing up the MACD, you do not necessarily have that divergence, which means we should always pay attention to what? Well, the Qs are suggesting that even if this 2-hour curled down, it would remain by that center line and be able to curl up into positive territory. So we would be looking for some kind of continuation for a divergence or a lower high. But the only thing here is this looks like a huge FOMO trap. So this could just be a trap already, because volatility is suggesting it is, and that'll make a lot of sense in a moment. So as of right now, you would say, hey, if the 2-hour can cross down, it's not really screaming ugly, ugly, terrible, bad things. It's overall just suggesting we would get a 2-hour pullback for the Qs. Now, the 30-minute is suggesting from the MACD, not the RSI, that you do have the weakness in momentum. So this does suggest, and there's a lot of room here. So anytime that curls up into positive territory, what should we look for? Continuation. And if this is able to confirm down, we're able to get somewhat of a 2-hour pullback. That's where we would look at the bottom side weekly expected move for the Qs. But I think it's very important. I think this is the most critical part of the video. So I appreciate you watching for this short 5 minutes to get to the 6th and 7th and 8th minute, because we are going into volatility now. And I actually think this is the main thing you should be keeping track of, which is the fact that the SPY is doing what? Let's just do it from the daily scale, right? We showed the daily charts. The SPY is going to new all-time highs again, right? Higher, higher, higher. So if it were the case and nobody saw anything bad coming down the line, then volatility should be where? Probably down towards 1212. It should be going lower, 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 lower. But it keeps going up, which is very interesting, right? Why is it going up now and not earlier when we are going up to new all-time highs, right? Why is it doing it now? Well, I think that's because someone knows something that you don't. And I think the fact that we haven't lost any of these divergences, we haven't violated anything here. The 2-hour chart is still positive in positive territory. The 30-minute pulled back today, did not even make a new low, and then started to go again and curled up at the end of the day. This means you have very heightened risk that you're going to run into that top this week. This is what we've been discussing over the weekend. This is probably some of you guys have maybe subscribed over the weekend. This is what we're discussing. Volatility, it doesn't, I mean, these markets, they can go up and up as more FOMO, more FOMO, more FOMO, but you are going to run into problems after, like, pretty much it's now to September 30th. That's when we're going to make this top, right? After September 30th, if you haven't done anything, you're going to be licking wounds later. And that's how I see it at this point, because volatility has not violated anything. Volatility hasn't even shown really that much divergence across the way here. I mean, the 2-hour chart hasn't even crossed down near the center line. If you really wanted to be bullish, well, then you would need that 2-hour to come down. You would need to break all of these lows. So volatility is still holding every signal. The market can keep leaking higher and leaking higher to get you pissed off. That's perfectly fine, but conviction in your plays is good. And that's why one of the ones that I really like is Google right now. I think Google, this 2-hour divergence is great. You even get a rejection divergence closer to the center line. I was looking at this one today. Really, really liked it. Ended up taking it for about to October's expiration for now. Trying to look for a move possibly down to fill this gap towards 240. This is a very, very good 2-hour signal. That should suggest what? A daily pullback is coming. And as this may need a retrace, I hold the possibility of being lucky and getting some kind of retracement down to like 230, 220 or something like that. I think this area right here would be fantastic, but I was able to open up positions for there. So there are ways to be scaling in, and I think that this market is overall just baiting people in, and then it's going to top out, and then we're going to see bad things because volatility has not violated any of its signals. Now, that overall is my opinion. Make sure to be paying attention to the actual confirmations happening in front of you, right? Those are the important things. But as volatility has not unconfirmed anything, as volatility still holds those major signals, I am still inclined to just sit here and believe that volatility is going to get this right. And volatility is saying we are about to see a weekly pullback for the market. So I just wanted to reassure you guys after an update, but I hope you guys have a great rest of your day, and I got to head out of here. So peace out.